Monday. What's up, everybody? Monday morning. Hope you guys are having a great day. Welcome to the Edition Daily Market Commentary. I'm your host, Chuck Fulkerson, taking a look at our markets from an educational perspective. We spoke it on Friday and said that Friday just might be the most important trading day of the year. And let's look and see what happened. We had a very strong bullish day on Friday, and that officially put in a higher swing low on a weekly time period. And the reason that we talked about that as being so important is because once I have a higher swing low and a higher swing high, then I've got the definition of an uptrend. And so while everybody else is losing their minds about the fear in the markets, and I'm not saying that we're going to come rocketing up to all-time highs from here, but I will say that I officially now have both a higher swing low and a higher swing high. And so by having both higher swing lows and higher swing highs, you establish a bit of a trend which starts from here. Okay, now, what is the next phase? Well, what this really means is that I'm okay to get into bullish equity positions, but where's my line in the sand? Well, my line in the sand is going to be under last week's low. So right there at about 38.87 is going to be essentially my line in the sand for moving forward, okay? So for those of you that are swing traders or your position traders, now's the time to start looking for potentially short-term bullish opportunities as we have, like I said, rallied a little bit up off of this low. If you're a day trader, our 4-hour trend is indeed up, and we put in a potential for a gap and go trade. We've just recently made entry, triggered an entry on that position here in the last few hours. And it's really kind of hovered around. So remember, the 6-candle rule is still very much in play on this position. So if we don't start making a move here soon, then we're going to move our stop to break even and close out of that particular area, particular level. We certainly have a gap fill area that exists down below for a potential reversal trade with room for price to run really all the way up to here. It's basically clean air all the way up into that region. A couple of other levels that we had looked at in the NASDAQ, very similar on the upside, gap and go. A retest back into this level is still a potential move at 12.6. But the NASDAQ also put in a higher swing low on a weekly time period. Now, this higher swing low is a little closer to the original swing low because the NASDAQ pulled back a bit further than the other markets, but definitely a place worth looking at. Now, a lot of stuff on the horizon this week that could cause that to change, mostly our CPI and our PPI numbers that are going to be important as we are heading into this week, so keep an eye on those. But looking at some of our commodities, crude oil, I really felt like we had a pretty good opportunity here on a 15-minute short out of this level. The market came and just sliced right through that like the proverbial knife through butter. Unfortunately, 4-hour trend does continue. We put in a higher swing low on this 4-hour trend. I still believe that we are setting up more poised for a bit of a rollover for price to continue to trade lower on the daily chart. But our 4-hour trend is now officially an uptrend, so I need to switch this level of supply to a confirmation entry going forward because I do have a higher swing low and a higher swing high on a 4-hour chart. And then on a 15-minute chart, looking at this area where we broke through that supply could have created a new potential area of demand for a short-term day trade opportunity right back into this region. So those would be kind of the levels on the crude oil and equity markets. Gold, we're humming along a bit sideways. There is a potential for a non-directional options position, and then in between that, on a smaller time period, there is some decent little levels. We actually had a pretty strong rally up in the overnights as gold is up 11 points. Sometimes we see these speed candles do tend to get retraced, and if this one does indeed get retraced, there's a little wick over wick level here at 1725 that would make for a decent little entry. There's also a potential breakout trade above here for a little run as we do continue to base a bit sideways through here. Let me raise that up just a little bit to get above these highs right here. I'm looking at above these highs right in there. So we would need a bit more basing in here to make this make some sense. But there is a little bit of, this is noise up here to the left. And so let's see if the little run happens on a breakout above that region here. So that would be crude oil, gold, and our equity markets. Taking a look at some of our currency markets, we looked at the euro in the overnights last night, and we did get a really nice strong rally into a supply area in the euro. This was the level that we looked at inside the live trade room, and we're starting to move away from that zone. So at this point, I'm going to take that and remove it because that level did make a nice move off of that area. And my next area down would be the origin of that move up, which was this very strong rally up in price. Now, we certainly still have the gap fill area as well, just a hair below that. But what we're seeing is really a reaction to a slightly weaker dollar. If I pull up my U.S. dollar index, the U.S. dollar index, it has gapped down and is really sitting at a place where we would anticipate price breaking a bit lower. And this is actually not showing me my overnight sessions. Hold on a second here. Let me turn on my extended hours. There you go. So this is what the dollar is doing as of right now. Our U.S. dollar is showing a bit of weakness. Now, on a daily time period, I think that there's a potential move for the dollar to come back down into this region here at about 107. And so as the dollar shows weakness, we're going to see things like the euro show some strength. So the euro would show a bit more strength as the dollar shows more weakness. On the daily chart, the euro has that supply level right here. That's the one that we hit in the overnight and have come down from a bit. So I don't know that I want to take that again, but I certainly have this little area right in here, right around 101, for the euro to rally up out of. Looking at our the Great British Pound, starting to rally up just a smidge, putting in a bit of a base, frankly. This is a bit of a basing pattern, right, with this rounded bottom. Markets tend to have those. Oftentimes you're going to see sometimes those rounded bottoms on those smaller time frames as there's a bit of accumulation that's going on right there. Doesn't look like it on a daily chart. On a daily chart, it looks more like a bit of a V, but we certainly got a daily reversal candlestick and then starting to rally up from there. So look for this trend to continue and getting long on a pullback or even taking a break above 117 for a breakout for today. So those are a couple of trade ideas. Hopefully those are going to work out for you today. If you have any questions, as always, shoot us an email, support@tradersarmy.com. Until tomorrow, buddy, I will talk to you soon. See ya.